Good afternoon. I'm Gloria Nelson with TUG, and we are so glad to have you join us today for our TUG Connects 365 programming. Now, as you settle in and get ready for the start of today's webinar, let me give a brief introduction for TUG, theusergroup.org, for both our current members and those of you who represent organizations that have not yet joined our online community of in-for distribution software users. Now, we've all heard that phrase before, that knowledge is power, and I can say unequivocally with great confidence that after today's presentation, you'll be waking up tomorrow with a little more of both. TUG webinars, online forums, and member events facilitate the timely exchange of ideas and information to help you work smarter and with more confidence. Now, no matter how you slice it, it's a winning and powerful combination. So if you're currently a member, it pays to get even more involved. And if you're not, please join our website. Please hop over to our website and visit www.theusergroup.org and find out why 2,300 heads are better than one to help you be the best at what you do each and every day. Now, before we get started, allow me to touch base on some housekeeping information. Buckle up for about 35 minutes. Open your tools, your Q&A bubble. We'll be monitoring that for questions. And not only that, but when you put them there, everyone in the digital audience can see and also like them and upvote them when we see more than one that populates. However, we'll also be monitoring the chat window as well. And you can communicate directly and anonymously if you would like in the Q&A bubble or in the chat window. Now, so go ahead and also feel free with intellectual property. We have been given permission to take screenshots as well as to capture chat and have you drop them in a digital note card to have them for later reference. And without any further ado, it is my pleasure to welcome both Michael and Larry, who are with Vertex. Mike is the Chief Tax Officer, and Larry is the Tax Director in the Chief Tax Office. It sounds like a lot that's taxing that's coming up. So without any further ado, Larry, go ahead and take it away, and let's talk taxes.
Thank you, Gloria. So we wanted to talk about understanding the tax challenges for manufacturers, distributors. We want to just kind of go over and discuss some things. We basically have 3 bullet points. Let's do our introduction first. Can we go to the next slide, please? So as Gloria mentioned, my name is Larry Mellon. I am the tax director in our Chief Tax Office, working with our customers and in-house consultants and salespeople alike. And I'd let Mike introduce himself.
Thanks, Larry, and it's good to be with all of you today. My name is Mike Bernard, I'm Chief Tax Officer. I've been here at Vertex for about 3.5 years, and as Larry said, the Chief Tax Office assists customers in developing new tools and services for the future. So obviously a lot of things going on in the transaction tax space. Prior to that, I was a general counsel and tax director at Microsoft and ran the North American tax operations for Microsoft for almost 28 years. So glad to be with all of you here today.
Thanks, Mike. And so I'll give you a little background. I've been with Vertex for 16 years. I've been in my current role for about a year. Prior to that, I managed all of our tax compliance. I have industry experience in retail, heavy manufacturing companies as well. So let's go into our next slide. So our agenda, we're basically going to talk about 3 topics. And we're going to go through a few bullet points on each. And then if anybody has any questions during the process, they can certainly type in their question, or after we're done each individual slide, we'll pause and see if there are any questions that are posed. Okay, so we'll go to the next slide. So I want to talk about legislative changes, and I basically want to talk about 2 things predominantly right now. Is basically about Nexus standards and Wayfair. I'm not sure if anybody here has any concept or knowledge of those, but Nexus standards were basically what was determined taxability of products and how they were being shipped and taxed. So in the past, a Nexus standard was based on a brick and mortar location. If you physically had a location in a particular jurisdiction, tax was then based on where you were shipping those products, where they arrived. Basically, back in June of 18, a Wayfair decision, Wayfair versus South Dakota, started coming across the whole country, and where they were determining that if you did not have a physical location in a certain jurisdiction, but you shipped to someplace else and had made certain thresholds on volumes of what you sold or dollar amount of what you sold, you fell into a threshold, and you were then required to collect and remit sales tax for that. So if you're in a situation where you're producing a taxable product and you're required to charge tax, you were generally doing that for the state in which you reside in. Now, if you sell across the border into another state, you potentially now have obligations to file taxes in those other jurisdictions. So a lot of our retailers, distributors, and companies alike that have now determined that they're now shipping outside these other areas in the past did not have this information being subject to tax. Now they're actually being called out on that and are now being subject to tax. So businesses, having to do this now have to register to be able to report all of their transactions, all of their sales, and they also have to be able to collect and remit those tax for each of those. Any comments on that, Mike?
Yeah, I think yeah, sure. Just a couple. I think on the first bullet point, Larry, when you mentioned about the Wayfair decision, which came out of the Supreme Court, and as you said, in 2018, one of the things that is interesting that I think a lot of folks on this call probably ought to know is that the economic nexus standards are different for all of the states. I think you kind of alluded to that. So in the case that was litigated, Wayfair in South Dakota, if you had more than 200 transactions or you had more than $100,000 in sales and you had no physical contact with the state of South Dakota, if you crossed one of those thresholds, then you actually had to start to remit and collect sales tax. The second thing is, the larger the states, normally the volume, the dollar volume goes up. So like California, I think has somewhere a threshold of like $500,000 or $1 million, somewhere in that, because that's a larger economy than South Dakota. And obviously states that are kind of in the middle between Missouri and North Carolina, they sit somewhere around 300,000 or $500,000. So there's a sliding scale to this. And I think one of the things that you alluded to is that historically, if you are a manufacturer or distributor and you were selling for resale, traditionally you never even had to worry, right, Larry, about actually going into another state. But now that you actually are selling there, now there's a reporting requirement for that. You may not owe any tax, but we'll talk about that a little bit more down the line. So,
So, thanks, Mike. So with that information, now businesses across the board now have to consider, what do they have to do with respect to these changes that are going to be required to collect or remit these items, and do they have solutions to help them track where all these transactions are happening? What are the steps they have to take? So we're kind of going late on our next slide. We'll kind of talk through that. So I wanted to see, does anybody at this point have any questions about what we've discussed so far?
Yes, sir. We have one that has populated thus far.
Great.
And the question says, what steps have you taken to ensure that you are assessing and collecting, remitting the appropriate sales tax based on the Nexus and Wayfair changes?
Okay. So so basically what you have to do is you're going to have to determine, did you meet that threshold, and you are required to file. Then you're going to have to reach out to that jurisdiction, register to do business potentially in that state or jurisdiction. So it could be the state of something, but it could also be the city of something if there's various taxes, local taxes as well. So you're going to have to go out, register to be able to remit and collect that, as well as you're going to have to start showing the tax on those transactions if it is a taxable transaction. So for a business, it may be transaction, something, we'll certainly talk about how things are different with a distributor versus somebody who is, not actually producing the actual software. I mean, the actual product. And we're going to talk about that in a future slide. But basically what's happening is that once you register, you have everything you're collecting and you're remitting to the jurisdiction. These are areas that businesses were so used to just doing with potentially their home state. They didn't have these other jurisdictions, and it could be more than one. Once you meet that threshold, as Mike discussed, it could be 10, 20, 30 states. You don't know, you haven't looked at it yet, or you may not be aware of these tax changes that went in place, and you potentially have yourself open to exposure for not collecting, remitting these jurisdictions. So what's happening with these rules that are being put in place, jurisdictions are now starting to reach out to companies because they know that the size of the company they are, or they know by looking at other companies that they know you sold something to another company. So now they have your name on a list. So now they're coming back to say, have you registered and collected and remitting? And they're starting to go after these businesses to make sure that they're fully compliant.
Larry, just to add one thing on that too. I know a lot of folks, when Wayfair came out in, again, June of 2018, there was most of the states, I think, probably put a light touch on auditing companies, certainly during 2019. And then again in 2020, when the pandemic kind of really kind of shut down businesses. But to your point, now in 2021 and forward, what they really want to do is to make sure that if you do have a filing obligation, if you do have a remittance obligation, that you're meeting those things today, particularly in 2021. There could be some exposure in the prior years, but what we've seen a lot with a lot of customers is that there was a light touch applied. Maybe there was some forgiveness there, but to the extent that you think you're crossing these thresholds, what we advise folks to do is look at the states where you're selling the most and kind of go after those first, and then go to the ones where your exposure may not be as great.
Right. Great. Thank you. Gloria, are there any other questions that came in?
That's all we have right now. So Larry, I'm going to turn things back over to you.
Okay, let's go to the next slide, please. So we're talking about compliance and some solutions, and we're going to talk about what some industry companies are doing and some ways to kind of help you with that, with those compliance items. So I have one here. Basically, I was using Coke as an example on here, where we talk about mobile devices. Now we know that there are companies out there that have companies that are delivering and distributing products across the whole US. So as an example for Coke, they'll have a handheld device. And on that handheld device, they're going to deliver to a supermarket, to a store, to a home, wherever. They're basically using a cloud-based solution that's attached to that handheld device that will tell them that what they're selling, if it's a taxable product that they're delivering, when they go to the corner of this street and this street, it's telling them what is the appropriate tax that should be on that invoice for the product they're delivering right then and there. Okay, so we know that taxing jurisdictions have tax rates that vary at the state, county, local, transit district. There's multiple different areas across the whole US that have different tax areas and different types of sales tax that are all incorporated in one. So with that mobile device, they're able to take that, and wherever they make that sale has a certain taxability. And as an example, Coke could get right back in that truck and drive 4 miles down the road, and the tax rate is different based on where it's at. So with having the cloud solution, and the benefit of that with these type delivery drivers is that it's able to give them the accurate taxability at that point. Those sales that take place during that delivery are then brought into into the system, in your ERP system or cloud solution system, and it's able to help dictate what goes on to that tax return, because it'll record what transactions of what sales and what tax was charged for what location. So instead, a lot of times people come back with their delivery slips, and here are the slips for the runs that I had today with all the transactions of where they've delivered to. This mobile device will help them put tax on that as applicable to make sure that they're accurately invoicing the end customer. Mike, you have something you want to add?
Yeah, just a couple of thoughts there. I think
Yeah.
that's a really good example of cloud-based solutions where you need flexibility, obviously, Larry, in the field to change an order, to add certain product or to take away certain product based upon what may happen in a particular store. One thing we've always told our customers, though, is whatever you do, make sure you build your solutions for your business. So
Right.
if you need something as flexible as that, like Coke did, that's a great solution. A cloud solution is really good. But maybe you're a manufacturer, and maybe you manufacture, say, 10 large machines every month, and you know basically where those machines are going to go. And maybe let's just say they're 500,000. You may not need a cloud solution. An on-premise solution may be just as good for you, or there's hybrid solutions as well. So one thing we tell people is you can benchmark all you want with other companies in the business, and we think that has a lot of value. But at the end of the day, make sure whatever you do as it relates to IT and obviously tax, that you build your solutions to serve your business best. So just a word there on that.
Yeah. And to follow up on that, just as we talked in the last slide about having the, having the potential to have more tax implications on where you're shipping your products to, you're going to have to develop. You're used to potentially having one system that does taxes for the one state that or jurisdiction you're located in. You don't know what this will open up, whether it be this, using ERP or shipping to multiple states or multiple cities.
Right.
Having an end-to-end solution that helps you with that will be something. Vertex has that. That'll help you be able to do that. But you need to, as Mike said, you need to look at your whole business and look at, do an evaluation of your risk. What is the risk in all these transactions of sales that I'm having and that I have to record with these jurisdictions, whether they be taxable or not? Jurisdictions are asking for more and more businesses to record sales regardless of taxability, just to be able to record that they've had sales, whether they be taxable or not.
Good points, Larry.
Yeah. Gloria, do we have any questions that come in?
I've just was looking, you caught me just looking now at the chat and the Q&A bubbles. Yes, this question populated: with the increase of compliance in new taxing jurisdictions, have you implemented new systems to handle the tax complexities?
Yes, I think that what most people should do, as I'd said, is they should be looking at putting some type of solution in place, because these jurisdictions are popping up. We're looking, we've gone through COVID, we have everything. We have these jurisdictions who are continuing to come up and say, there's a way for us to get taxed. Let's either increase our tax rate or let's create a new tax in a jurisdictional area, maybe a local government, maybe a county, maybe a certain area that wants to get in on some of this tax action. So what happens with this is that, you need to start building out, get with a solution that can automate that, because you don't want to rely on some manual process, and you may not want to rely on some of your internal ERP that's not able to handle a tax solution. So you'd certainly want to make sure that the tax solution can work with your system so that the sales that you have today, you're not saying you need to go back and recreate the wheel and come up with a new ERP system for your company, but work with it so that it works with the end solution for the tax application that's able to calculate what taxes should be used. We'll be able to do reporting so you know what's being used, and then potentially get it where it's actually able to physically do the actual tax return for you and then remit it to the jurisdiction. So that process all exists, where if you're feeding this stuff in for your transactions, an automated process of what sales you completed for that day by jurisdiction, by state, cross state, all together, it gets documented that once a month when you're doing your filing compliance, it takes all that stuff, automatically produces the return, and it sends it out the door, and then you're compliant. So having a solution like that for the compliance piece to ensure all that stuff's filed is very important. By not doing that, or not being aware that you have to file that, you open yourself up to potential risk of audit. Once these jurisdictions, they know your business, they know that you're in this jurisdiction, they know that you exist, they know because they've looked at other customers that you sell to. So they know that you're making transactions. And if they find as if you're not compliant, you're one of the first people they're going to come knock on the door. So you want to make sure you're compliant, look at that, and determine what risk you have with that, and make sure you file.
And Larry, I'm assuming, I don't like to assume, so it's a question. I'm assuming that not only will they levy the tax, but there are also interest and penalties that may accrue as well, potentially?
That's very true. Yes, there would be.
Yep. Okay. That's what we have for now. So I'm going to turn things back over to you.
Right. Do you have any addition to that, Mike? Anything on that comment?
Yeah, I just want to add some the question that Gloria had there, and as well as some of your comments. I think one of the other things too is, think of it this way too, as taking everything from the order to, that's everything in the order to cash cycle, and really being able to calculate the proper tax or non-tax on your sales. But what Larry really emphasized there was the tax returns on kind of the back end. There's a lot of value in actually signing up for those services, and we do have a service for that, because a lot of times what happens is all that information is stored centrally, and then so when the audit comes in, Larry, you alluded to that all that information is there, and it actually ties to your return, so you can prove it all out. That's incredibly valuable. And the other thing too is, If you're selling in 10 states and you consistently have to collect or remit for those 10 states, you're going to file 10 tax returns, times 12 is 120 tax returns a year. I don't think that's something that you want to do. And most services, when you remit all that money, you only have to send one wire to the service and then they remit all the funds out, right, Larry?
Yeah,
so
and
there's
that's
some real
10
efficiencies. Yeah,
right. And that's
with
10 tax
AP
returns per month times
per
12
month,
months.
right?
Yeah.
Right.
Right.
And then all of the checks or wires that you have to send out as well, as opposed to
Right.
just sending one wire to the service. So
Right.
the companies out there get a tremendous amount of leverage by signing up for those returns. And something that I mentioned earlier in the podcast is that if you're a manufacturer distributor, and let's just say you have no tax because it's a sale for resale, there hasn't been much movement, Larry, at least what we've seen, in our,
Right.
at least by regulation or not, that you don't have to file those returns.
Right.
You still may have to file the returns, show your sales numbers, and show that you're exempt. And we'll talk about what that means in this next segment right here. But you still have to file a return, and there may be zero liability on it, but it's still a burden. And I would encourage you to actually sign up for those services. There's a lot of value there.
Yeah. That's a very good point, Mike, because, many people who are listening on this, they are in distributor or wholesale, and they're like, it doesn't matter. I'm not selling something taxable. It's going to the end user and then taxes on there. But these jurisdictions are coming back and saying, even though you're not the person taxed, you're still going to have to register as
Right.
producing wholesale sales, or you're just distributing and you're reporting a gross sale amount. So as much as some of the people in here may feel differently, that you're still those obligations are now coming due, and jurisdictions are going to make you do those more and more.
Exactly.
Yeah. Great. Okay. With that, I think, Gloria, I think we can go to the next slide. So I want to just talk a little bit about exemption certificate management. I wanted to talk about basically, I would think that most people that are in as distributors and wholesalers are probably used to what exemption certificates are, but I'll just give a little background. Exemption certificates are put in place by companies that are buying pieces of a product to be able to incorporate and build one product for sale. I always use just the analogy of like a car. So you're buying everything from tires, the wire, to carpet, to leather, to seats, to everything, the motor, every piece is being bought by a car manufacturer, and they're giving an exemption certificate to all those companies that they buy from, and they're not paying tax. Now that car company is reporting that sale on their tax return that we just spoke about as a sale they're made, even though it's a non-taxable sale. Then once the car is completely built and sold, then sales tax is charged from the dealer to the person to pay for that sales tax. So what the exemption certificate does is enables the company to be able to buy products non-taxable based on the assumption that those products are not being used by you as the end user, that you were incorporating them into another product to be sold. And that's just the general consensus of what exemption certificate does. So what's happening is that you're getting, if you are someone who's manufacturing something, or you are a wholesaler, that you're purchasing something from someone, but you're not the end user, you're then moving that product on, you need to make sure that you're getting an accurate exemption certificate on record, so that you can then justify why you did not put sales tax on that transaction. So with that, you also need some type of a solution to be able to manage those certificates, because you have multiple certificates that are coming in based on the products that you're shipping and sending out. So we, again, offer a solution that does that manages all those certificates, keep those in line, keeps them separated and organized, so that when you are to get audited, which businesses will get audited to ensure they're doing things accurately, the exemption certificate system with that will also keep those records, so that when an auditor does come in, you have all that documentation to give them to justify what you've put on your return. Do you have anything you want to add to that, Mike?
Yeah, I think one thing too, Larry, and this, I know this has been your experience for years and years. It was for mine when I was in industry, is that auditors generally feel that taxpayers do a good job on the sales side. So when they're selling things, they're generally collecting or emitting, pretty good there, unless it's a sale for resale. But as you well know, a lot of times when auditors come in, the first thing they look at is they don't look at the sales side.
That's right.
They look at the exemptions, right?
Right.
Because
Purchases, yep.
purchases too. And so that's a
Yep.
place where there's 7, 8, 9% should have been collected, but you have to have this document. You have to have this certificate that also shows that it was a sale for resale. So the central management of this and the proper use of it is really important. So it can be based on use. It can also be based upon the type of organization that's using it. If it's a tax exempt organization. And then the other thing too, Larry, I don't know if you run into this very much, but these certificates have to be renewed, right? Anywhere from 1 to 3 years. And one of the things our solution does is actually tells you, as someone who purchases or licenses software, when a certificate is just about ready to be up for certain recertification, say a month or a quarter ahead. And then it actually can send out notices to those individuals who need to re-up and send a new certificate in. And I know that's a pretty helpful thing, because it's hard to manage all these certificates.
Yeah, it is, and some states have been lax where they've had multiple years. I think Florida was one state that about 10 years ago stepped in. They were like every year. So you're pretty much, depending on the size of your business, have one person that's just maintaining potentially one state, depending on what you're doing. Just keep getting those and renewing each of those. Yeah, so that's great. And I think that I was going to add on to that about just with the resale certificate, just tracking that. And then, as you said, like an auditor is going to come in and take a look at these records. Yes. And, when people hear audit, they think, I've done something wrong, I'm audited. And these businesses, most businesses get audited. So it's not like it's a bad thing. It's that the taxing jurisdiction comes in to ensure that you're doing things accurately so you don't get yourself in trouble. Where most people think, I'm being audited, I'm in trouble. If you're doing everything accurate, there shouldn't be anything to worry about. And to Mike's point, when they come in the door and they're, everybody's worried about, did the invoice that went out to my customer be accurate? Was it accurate? And the taxing jurisdiction auditor is going to look at that and say, you've put sales tax on it. So the chance of risk of something is pretty low. It's more or less looking at the resale certificates, the exemptions, that they're going to come in and look at it and say, you had sales on your report for X amount of dollars. We want to understand why you didn't put tax. So they're really interested in seeing that certificate that says, I don't have to pay tax, or this get out of tax free type card, because it'll then be imposed on the end user. So they do that. So it's very vital to keep track of those records to ensure that you have those certificates on file, and it will definitely reduce your audit risk as well.
Yeah.
All right,
the other
great.
thing, Terry, is you don't want to have to go back to the customer and get a certificate that maybe was outdated or not,
Right.
not a proper certificate. So that you really want to keep these things current and valid. So
yeah, taxing jurisdiction may not accept that. Like if you have one that expired 5 years ago and you're like, well, this is the one I had, they're like, sorry, they're potentially going to ding you on that, charge you the tax and interest and penalty because you didn't have a system and you didn't manage that 5-year exposure. So yeah, it's a good point. So Gloria, do we have any questions that have come in? We can go to the next slide.
Yes, sir, we do. It says, how do you record and maintain your exemption certificates? Do you have a process to request and monitor these records? It sounds like maybe it's an auto process, Larry.
Yeah, I think that there is a system that has that, as you select them, as you come in. I mean, anybody who is producing a sales invoice has to determine, should there be tax on there? And 9 times out of 10, you have an automated solution for your sales invoices that would calculate that tax. You have to be able to take that tax off and have the certificate. So with it, as an example, our exemption certificate wizard tracks all those certificates. They're all scanned, they're all saved in file for records so that when an auditor comes in, they can produce that. So, there's just, it's just great to have some system to have on file. There have been many companies I worked with before where it's one person's responsibility to maintain them, and they're in a pile in a computer box, and that's where they keep them. And then when an auditor jurisdiction comes in trying to see if they're accurate, usually ends in them having audit findings, because most companies are primarily making sure the tax is correct on their invoice going out and not tracking the other stuff behind the scenes. So implementing a system is crucial, to have something in place that tracks all those certificates. Now, with the exemption certificate wizard, it can be tracked by the state or jurisdiction where it was sold, what was the products that was being sold. There's so many different ways and so many different avenues that when that's saved, that there's record keeping, that when you go back to produce that certificate, whether it be for an internal audit of yourself to check out your controls, whether your plant or division looks at what transactions have in a certain period of time to make sure everything was accurate, or a taxing jurisdiction, whichever, these reports can be pulled to back up what's on your sales registers and your reports that are going out to the jurisdictions, or primarily just for an internal review. You may be reporting to your plant CFO that says this is the information, the sales that we had. They certainly want to look and make sure you were compliant and that you've paid all the appropriate taxes. Well, let's make sure we have a document to prove why we didn't pay taxes on something like that. So you can basically develop a process yourself where, if you have an invoice that comes in from something you purchased that doesn't have tax, you have a process in place that makes sure you evaluate that. If you're going to issue an invoice to a customer and it does not have sales tax on it, you develop a process that says we have to evaluate all invoices that do not have sales tax on it before it leaves the door. Now, that's twofold. It could be one, because an exemption certificate is in place for that. It could also be that the physical product that you're selling is also not subject to tax. So it could be both, but some type of control to make sure that you're mitigating and reducing any risk for exposure before you invoice your customer, pay an invoice, is something that you should do right away, immediately, and get that process in place. Do you have anything else to add on that, Mike?
No, I think you covered it well, Larry.
Okay. Are there any other questions, Gloria?
Yeah, one of the things that always pops up, so this doesn't come as any surprise, is people want to know what is the timeline and also degree of ease of implementation.
So, of course, to answer that question, it also depends on the size of the industry, the business that's happening. So, there's no flat line that's drawn out on how long something would take. It depends on, you could have a customers coming in who we're using paper and pencil and writing invoices, or we could have someone who has an automated invoicing system, or we have an e-invoicing. So it depends on the complexity of the company, what they have. But regardless of what the solution that they have in place today, we have ways to either get you automated onto that system or get your invoicing system so that your sales register talks to an ERP system, talks to the Vertex solution or other solution to be able to make sure accurate tax is either assessed or emitted, or to the level where you need someone to do that stuff for you, where you're basically saying, here are my sales. This was the tax I charged. How do I remit this? So we have solutions that'll help you determine what tax will be on there, and you can remit the returns. We have solutions that are out there that we can implement and get it working so that we can then do that for you. So it varies on what you want. All those offerings are out there, determining on the size of your business, but we can help with every solution to get you compliant, reduce your risk of exposure, risk any of your accounting exposure, and all your taxing jurisdiction exposures.
Wonderful. Larry, that comes to the conclusion in the end of the questions that have populated to us in the Q&A bubble and in chat thus far. So if someone wants to reach out to you to learn more about the Vertex tax solution, can you give us not only a slide that shows the best person to reach out to, but also an audible on that for anyone who might have need?
Right. So we have, if we want to, we can go ahead to the next slide. I think the contact
sure.
is on
Sorry
there
about that.
No, you're fine. I think Nick Laurie is on there. He's our channel sales manager. We can reach out to him. There should be a slide with his information on there. And then with that information, you can reach out to him, any questions. If you would like to speak to Mike or I about anything that we have covered here today, questions on anything, you can certainly reach out to Nick and he can put you in contact with us. Did you have anything else you wanted to add, Mike? Or
No, just appreciate the
Yeah.
chance and the opportunity to
Yeah.
speak to the folks today about some important tax issues for a lot of customers out there. So thank you.
And I agree with Mike on that same sentiment. This is really good to kind of get together. We certainly like working with TUG and would like to continue doing this, and especially with any of your members. And as you talked at the beginning with new members, we're certainly here to help you any way we can, partner with you, and help anyone with any questions they may have to make sure that they reduce their tax risk. So that's all I've had. So I appreciate it.
Well, thank you so much, Larry. First of all, I want to say a big thank you to Michael and Larry for their deep dive here into Vertex's tax solution, and also to each one of you who have joined us digitally online this afternoon. Now, as with most all of our public-facing webinar content that comes with our partners, it will be available in 1 to 2 business days, posted on our TUG website on the public side of the facing page, as well as in our forums behind the member-only wall. So our next webinar is coming up this Friday, October 15th. At 2:00 p.m. with our AIM group that is going to be gathering for a virtual roundtable discussion and preparing for 2022. Can you believe that's just around the corner? So watch your inbox, and also make sure if you want to register, go over and hop to our website. Our content is there along with links for registration. And also a quick reminder too, make sure that you dial in and get the rest of the content that you want to view. If you've already registered, and still it's not too late to register to view any of our TUG Connects 2021 conference materials. They will be available through the close of business on October 31st. So we'd like to invite those of you who are members to continue this dialogue. We know that Vertex staff is going to be monitoring those forum pages that relate to those tax implications. So make sure that you continue the conversation there. And also, though, for those of you who are not yet members of TUG, we invite you to join us. So hop on over to www.theusergroup.org and join today. And without any further ado, gentlemen, again, thank you. And as they say in Hollywood, that's a wrap.